War is coming, but will war crash the stock market and crypto and Bitcoin along with it? A number of wars that happened in the past. I've done this tally of past US wars when I was just a junior at a major investment bank, working on the trading desk as a trainee trader. And I found that out of the 24 wars that US was involved in since founding of it as a nation, 23 of them ended with the US stock market higher after 9 months. Right, there was only one exception. The reason why this war is different is because Bitcoin and crypto follows, have you noticed, follows the stock market when it comes to wars, right? It's been proven so many times. In the last 3 or 4 instances, such as the Russia-Ukraine situation, such as the last time Iran and Israel bombed each other, a year ago when this happened. Every time this happens, stocks drop, oil spike, and this thing and Bitcoin takes a dump. It may not be huge, might be only like 3%. Sometimes it's like 8 to 10%, depending on where the market maker is positioned, but it always takes a pullback. The revealing thing is this. The revealing thing is that every time when there has been war, basically, you can almost assume that people should buy the dip, right? Not always, like not this one, but what's the difference? In fact, this, we're just being cheeky here. We call it buy the invasion. Invasion of Vietnam, buy the invasion. It dips by the Gulf War with Iraq, buy the invasion, buy the dip. So then you think, oh, well, that's really easy, Pablo. Then I get the situation now. Then basically buy every war dip. Is this true or not? This time is different. I've explained this before, just for folks who are not in my Discord. The reason why this war is different is because this is Iran. And this little body of water here is called the Hormuz Strait. Here is Israel. They can lob missiles at each other all day, and chances are they could do this for like years, right? The key is Iran, if it chokes off the oil supply here, plant just sea mines in this area. Now look at all the oil countries around here. You've got UAE, you've got Qatar, Bahrain, Kuwait, Iran, Saudi Arabia. That's basically like, what, 40% of the world's oil supply. But however, only 20% comes out of there. Some of it comes out this way and goes through the Suez Canal to go out there. But that's 20 to 25% of the world's oil supply and gas supply. If that gets choked, obviously, this is going to be a very different situation. In fact, it's going to be more like the war United States experienced in the 1970s. There was about 5 wars all in the Middle East, all between Israel and other Arabic countries, and somehow Israel managed to survive all of it with the help of the United States, of course. And you can call it a win or you can call it a draw. I don't want to offend people, but that's what happened. There were 5 wars, and the Arab countries were really angry. They basically declared an oil embargo to the United States for helping Israel. So during this time, during the entire, starting from like 1966, basically you saw that the Dow Jones, that was the main index to measure United States back then, basically stuck at 1,000 point and just went down 1, 2, 3, 4, 5, maybe even call that 6 times, and just never went up because oil prices went up 3x. Like imagine what's oil price in the US right now? $4 a gallon, $4.50 a gallon. Well, just imagine if that 3x is to like $13, $14 a gallon. What would the US economy be like? That's what happened in the late 60s and all of the 70s. So it went from 1,000 down to, what's this? 563. So 45% drop. This would have been like a 30% drop. They kept on having these 20% drop. Like basically that's what happened to the US economy. So we say, oh, look, always buy the invasion, buy the invasion, buy the invasion, buy the dip. Always trust America to win the war, and therefore its stock market is going to keep on going up. But what happens when you choke off 20% of the world's oil supply and oil prices spike? You could have a repeat of the 70s situation. And the 70s situation is kind of similar because, look at this. This was coming out of the Great Depression and then coming out of World War II. This was basically a monstrous rally into a 20-year, like a 20, 30-year rally, and then the oil embargoes hit and then it goes sideways. So this look at this. This is basically 2000 dot-com bubble. It doesn't show up as much on the Dow Jones, but if you look at Nasdaq, it was like down here. 2009 GFC, and then you've got a 16-year major bull run, right? Up only bull run, and then imagine an oil thing hits. It would go sideways as well at best, and probably we see like a 50% to even 70% crash on the US stock market. But that would happen over 3 years. So before then, I think we get a blow off top, something like this. Why do I think we're gonna get a blow off top in the short term? Well, because of this. US economy is actually still doing quite well. So this is what they call the economic surprise index. And for folks in my Discord, you know, I like to use the economic surprise index because it doesn't measure what the economy does. It measures the economic indicators that come out. How much do they surprise the economists who are predicting those results? Next few months, it's very unlikely for the economic surprise index to go down this way, right? It's at just below zero right now, but it's more likely, right? Looking at this chart, for the economic surprise index to go up this way. If it goes up, then guess what happens? Then that means the economic results are going to come out better than expected. That's literally what this index means. That means basically the inflation is going to be lower than expected, GDP is going to be higher than expected, and employment is going to be better than expected, all of which. And when that happens, basically going into the next few months, then basically up to about September, we could have this run up to about September. Stock market is going to look good. Stock market is going to look good. Economy looks good, so stock market looks good. And my prediction is for a blow off top into September to November, and we top somewhere in between September to November, and it could be a repeat of the 70s. It could be like one of these bad boys, right? Major crash scenario, or a repeat of the 70s where it goes nowhere. Like after this up only bull run, this was how long? This was from here, from 42 to 66, 24-year up only bull run, and then it just goes nowhere. But remember, yeah, you're like, oh, the market went nowhere. But inflation during this period went up like 3 or 4x. So your portfolio basically, probably 2 to 2.5x. Your portfolio went down like 70, 80% just by holding it during those 10 years. But what's going to happen to crypto? Well, crypto, as I've been saying, next few months, I am still thinking the blow-off top scenario, unless some sort of catastrophic war scenario comes out of Iran and Israel. Just to update you guys, this is ETH staking. ETH staking is back now at an all-time high, right? We just saw ETH whale buying shot up to like a 6-year high yesterday in my video, and now we're saying ETH staking is going to an all-time high. Something very unusual is happening with ETH. For ETH staking to do this, it's not the small retail guys holding ETH and staking it. This is the whales staking. They're buying it and they're staking it, and yet prices going sideways in a bull flag. I think we get one more dip. We get a big scare around 2,300, high 22s, like 2280, 2290, then boom, big move up to like next target 3,100. Okay, thank you for tuning in, guys. I'll catch you guys next episode.